Welcome to the Depth Dive. Today, we're zeroing in on Page Industries Limited.
That's right. You'll know them for brands like Jockey and Speedo too.
Exactly.
Wow.
And we've got their official numbers, the press release, the investor presentation they filed with the stock exchanges.
Yep, covering the quarter and the full year that ended March 31st, 2025.
So our mission today, for you listening, is really to cut through the noise.
Yeah. Pull out the key insights. What's the real story behind the performance? What's driving growth? What's the outlook?
Right. Without just drowning you in data, we want the so what. And maybe some surprising details.
Definitely. We're looking for those aha moments.
And straight off the bat, one number really jumped out at me.
Oh yeah, which one?
That huge 51.6% year-over-year growth in profit after tax, the PT, just for the fourth quarter.
Wow, okay. Yeah, that's significant.
So let's unpack that. What's going on there?
Well, that 51.6% PIT growth is definitely a headline, isn't it? But looking bigger picture financially, their Q4 revenue hit ours, $10,981 million. That's up 10.6% year over year.
Solid growth.
And for the full fiscal year, revenue was ours, $49,349 million. So up 8.0%.
Okay. And what about actual volume? How many pieces are we talking?
They moved a lot of product. Sales volume in Q4 grew 8.5%, 49.2 million pieces.
49 million. That gives you a real sense of the scale, doesn't it?
It really does. Huge operations.
So we see the revenue growth, that massive pat jump. What about the EBITDA, the earnings before all the deductions?
Right. EBITDA. That also tells a pretty compelling story.
How so?
In Q4, EBITDA jumped 43.2% compared to last year. Came in at ARA's $2,352 million.
43%. Okay.
And for the full year, EBITDA was up 23.6%, reaching ARA's $10,626 million.
So strong growth there, too. Where's it coming from?
Well, this is where it gets interesting. Management, specifically the MD, Mr. V.S. Ganesh, he pointed directly to a sharp focus on a few key things: supply chain efficiency, product innovation, cost optimization, and consumer experience.
Ah, okay. So those are the levers they're pulling.
Seems like it. Especially the supply chain and cost optimization. The report highlights those as key for the EBITDA margin growth.
Right. The behind-the-scenes stuff really driving profit.
Exactly. And stable raw material cost helped too, created a good environment for them.
So it sounds like internal improvements made a big difference.
I think so. Especially because management mentioned that overall consumer demand growth was, well, muted for a lot of the year.
Muted demand, but profit soared. That's interesting.
Yeah, they did see some recovery signs in the second half, but that big pat jump, it suggests their efficiency gains were, really powerful.
More than just the market lifting them up.
Precisely. They found ways to boost performance internally, even if the overall market was a bit soft.
Okay, so what else did they say about the market itself? Any specific trends?
Yes, and this is quite insightful, actually.
Go on.
The growth they saw. It was stronger in Tier 2 and Tier 3 cities.
Really? Outpacing the big metros in Tier 1?
Yeah, significantly. Which suggests they're really connecting with maybe a broader consumer base, or perhaps facing less competition there.
That could be a key strategic advantage, tapping into those growing markets.
Definitely looks that way. And looking forward, they seem optimistic.
Why is that?
They mention things like potential government tax rationalization, controlled inflation, and a forecast for a normal monsoon.
Ah, factors that could boost consumer spending power.
Exactly. Keep an eye on that.
Makes sense. So, strong growth in smaller cities. How are they reaching these customers? What about their sales channels?
Good question. Their modern retail, that includes their own exclusive brand stores, the EBOs, and e-commerce, showed healthy growth.
What drove that?
Things like good performance in existing stores, opening new ones, better operations, better customer experience. Quick commerce is also boosting their online side.
Okay. And the traditional shops? General trade?
That saw more modest growth, but it benefited from healthy inventory levels and that demand we talked about in Tier 2 and 3 areas.
So, holding their own there.
Seems like it. The report suggests they're often outperforming competitors in those existing multi-brand stores.
And didn't they launch a mobile app? How's that doing?
Yeah, the Jockey app, apparently seeing strong consumer engagement, gives them that direct line.
Direct connection. Useful.
And they're nearly done upgrading their distributor management system digitally, too. Should streamline things further.
Sounds positive. Was it all good news channel-wise?
Not entirely uniform. The large format stores, like department stores, face challenges. Lower foot traffic.
Ah. So what are they doing about that?
They're consolidating, focusing on maintaining a premium brand presence in fewer, better locations, perhaps. Shows they adapt, right?
Yeah, pillaring the strategy. What about Speedo? Any news there?
Speedo saw encouraging growth in Q4.
Why Q4 specifically?
Summer kicking in, increased demand for swimwear. Pretty straightforward seasonal effect.
Makes sense.
And on the product front, they keep things fresh. Launched 6 new styles in Q4 across different lines. Juniors, women's innerwear, Jockey Life.
So innovation continues. New products, smart channel adjustments, efficiency. Seems well-rounded.
Yeah, quite a comprehensive approach.
Let's zoom out again. Their reach. How extensive is it, really?
It's pretty vast. They've got nearly 4,000 distributor accounts,
Wow.
reaching over 2,700 cities and towns,
Huge footprint.
and retail presence. Over 110,000 multi-brand outlets, plus their own direct strategy is strong.
The exclusive brand stores.
Yep, 1,453 of them, including ones just for women or kids, plus factory outlets.
That's a lot of direct contact.
It is. Then add presence in over 1,200 large format stores, plus Jockey.in and other e-commerce partners.
And Speedo's reach.
Also substantial. Over 1,000 stores in 150-plus cities, including 36 dedicated Speedo stores.
Okay, that level of market penetration is genuinely impressive. Really underscores their position.
Absolutely.
Shifting gears slightly, what about the company's core identity, their strategic goals?
They state their vision clearly, satisfying the human need for comfort, high-quality, innovative products, best value.
And their mission.
Ambitious. To be the largest, most profitable premium innerwear and athleisure brand in their markets.
And those licenses are key, right? Jockey and Speedo.
Crucial. The Jockey license runs until 2040. That's long-term security. The Speedo one for India is also exclusive. Strong partnerships.
What about manufacturing? Do they make their own stuff?
Significantly. They have 16 units, mostly in Karnataka. Over 70% of production is in-house.
That gives them a lot of control over quality, I imagine.
And definitely. It's
Yeah.
noted as a strength. That level of control is quite noteworthy.
So looking ahead, what are their main growth priorities?
Several key areas. Expanding production capacity, growing their channel presence across distributors, EBOs, large formats, e-commerce,
Okay.
investing more in brand building, sales, marketing, boosting R&D, and their digital transformation push.
And what do they see as their core strengths underpinning this?
Brand equity Jockey is huge. In-house product development, that massive distribution network we just talked about. Wide product range, the long-term Jockey license, strong financials. They actually highlighted a 73% ROCE.
73% return on capital employed. That's really high, isn't it?
It's very healthy. It means for every rupee they invest in the business, they're generating a very strong return. Shows incredible efficiency.
Wow. That definitely stands out. And a strong balance sheet, too, they mentioned.
Exactly. Solid financial footing.
Speaking of financials, how are they treating shareholders? Any dividend news?
Yes, good news for shareholders. The board declared a 4th interim dividend for FY24-25.
How much?
Rs. 200 per equity share.
Okay. When's that happening?
Record date is May 21st, 2025, and payment will be by June 13th.
And this wasn't the only one, right?
No, they paid out interim dividends earlier in the year too, so it shows a consistent pattern of returning value.
Which, for you listening, signals financial stability and a commitment to shareholders.
Right.
Now, sustainability. It's increasingly important. What's Page Industries doing there?
They've put out their 6th sustainability report. They seem quite committed.
Any specifics?
Yeah, they cut their energy intensity by 18% compared to FY20. That actually beat their own target.
Good progress.
And they reported recycling 100% of their pre- and post-consumer plastic waste in FY24.
That's significant.
They also focus on a safe, inclusive workplace. They have a large workforce, lots of women. And they've gotten external recognition too, like Best Garment Industry Award from the Karnataka Safety Institute.
So it seems embedded in their operations, not just an add-on.
That's the sense you get. Longer-term goals around resource efficiency and responsible sourcing are mentioned too.
Encouraging to see. One last, check the auditors. Everything okay with the formal accounts?
Yes, clean bill of health. SR Batley Boy & Associates gave an unmodified opinion on the Q4 and full-year results.
So independent validation that the financials are presented fairly. Always reassuring.
Absolutely.
Okay, so looking ahead then, what's their outlook? Any potential bumps in the road?
Well, the long-term picture for innerwear and athleisure in India, they see it as very positive.
Driven by?
Urbanization, rising incomes, the usual macro trends. But they did acknowledge some near-term uncertainties, specifically mentioned potential impacts from geopolitical conflicts in Western India.
Ah, okay. A real-world risk factor.
Yeah, something that could affect immediate performance. but their overall focus remains on capturing those long-term opportunities sustainably.
Right. So pulling it all together, what does this deep dive tell us? What should you, our listener, take away?
Well, Page Industries has shown really strong financial performance, hasn't it? Especially that last quarter.
Yeah, driven by that efficiency focus, strategic moves into smaller cities, and that multi-channel approach.
They're managing a complex operation supply chains, changing consumer taste towards, say, sustainable products, plus investing heavily in digital.
It paints a picture of a company with strong brands, vast reach, and a clear focus on both the bottom line and responsibility.
Absolutely. And that dynamic of near-term uncertainties versus long-term confidence, yeah, that's something to watch.
Definitely. Which leads us to a final thought for you to chew on.
Go for it.
Given their big push into Tier 2 and Tier 3 cities, how might things like changes in the rural economy or even just better digital connectivity spreading further in those areas, how might that shape their growth story even more in the coming years?
Yeah, that goes beyond just the numbers in this report, doesn't it?
Yeah.
Thinking about those broader trends.
Exactly. Something to ponder. Thanks for joining us for this deep dive.